everyone. Happy Sunday. This is Simon with AvaTrade, and I want to welcome everyone to our weekly webinar and a special welcome to the new people. And for those of you that are new, just 2 words about the idea of the webinar. I could pretty much read it on the title, Your Weekly Trading Plan. What we're trying to do is make a plan for the week, create a structure, be more organized, less spontaneous, and there's no guarantee results, but there's always better to be prepared, have a plan, and as I always say, you plan your trade and then you trade your plan, as traders like to say. Few things about myself. Excuse me. This is me, Simon Friedman, Senior Account Manager with AvaTrade. And I've been involved with trading for almost 23 years, over 22 years. I started in June of 2000 when the bubble burst. I came to become a day trader. I got licensed. I worked on Wall Street in a few firms. And I did it for about 11 years. And then I moved to mentoring and educating other traders. And of course, I continue to trade through the years. And now I like to work with customers at AvaTrade, and I try to help them become better. The agenda of the webinar is pretty much the same every week. We talk about indices, stocks, commodities, and FX. Today specifically, we'll keep the same format. We'll talk about indices, including US and European and Asians. We'll bring up about 10, 11 stocks and talk about it. Commodities, energy, metals, and softies, and Forex. These are the channels that I recommend you to subscribe to. You have Telegram, you have Twitter, and my favorite YouTube channel. We're constantly adding new information there. Most of the webinars are being recorded. If you missed live webinar, you can watch the recording. Besides that, there's a lot of educational material there. You have tutorials, you have all kind of information, daily market reviews, and so on. You can subscribe and click on that bell so you'll be notified on new things being added. And risk warning, I almost said risk management, which is important. You can find the full statement at avatrade.com, and everything we do here is purely educational. Now, big picture I want to start with. You probably heard all over the place, recession, fear of recession, and so on. So I took a screenshot here from marketwatch.com. You can read the article. And it says right here, the stocks could fall 10% the pain trade takes hold before bouncing back later in the year. It's kind of a split opinion between analysts. Some say we're going to fall, and then the second half of the year, we're going to go up. Others say the opposite. We're going to have a run which was started since the beginning of the year, and then the second part of the year will be a sell-off. We'll see what happens. Analysts, it's their job to analyze things and come up with their predictions or analysis. And our job as traders is to trade and look for opportunities. Now, they give for S&P 500, I think it's in this article, they give a range between 3,600 and 4,200. And it's not clear which comes first. Okay, so let's see what happens. Now, last week, we showed another evidence of cooling down inflation, which market took it positive. At the announcement, that was very choppy. First it went down, then it went up, and so on. And since then, we've been kind of moving up. We'll take a look at the markets in a moment. Very important also, this is going to be an unusual week. We have Martin Luther King Day on Monday, which is the federal holiday in the States, and U.S. markets are going to be closed. And as you know, being the most traded by volume market, if it closed on Monday, it's going to be choppy markets, choppy trading across the board. So it's not going to be the same day. Of course, European markets, all other markets are trading, just US is closed, but you won't have indices, you won't have commodities, and so on. So let's see how that day plays out. And coming Tuesday, it's back to normal. And we have economic calendar. Again, for new people, I'll explain a few things about economic calendar. First of all, is it important to use it? I think yes. Even if you're not trying to make predictions, and I think making predictions these days is not really the best thing to do. But the idea of certain announcements coming out and being aware of it and being prepared, it's very important, so you're not going to be caught by surprise. And here, what I do, I take out the high impact events, I filter them. You can do the same. You can find economic calendar on our web trader, on the app, or all kind of third parties. You can Google it. I know a lot of you are using it. There are certain major things that happen, including the CPI data that came last week, which affect market tremendously, increased volatility. So this upcoming week, as I said, Monday, not much coming out. The US market's closed. So on Tuesday, we have GDP numbers from China. China is on the radar. We had the index running up since they removed all the limitations as far as COVID. So we have GDP numbers from China. I think it's the first number since the easing of the conditions in regards to COVID. So let's see what happens there. We have unemployment data from UK, also on Tuesday. We have CPI numbers, inflation numbers from Canada, very important. Wednesday, Japan, maybe finally we'll see some results. As you could see, Bank of Japan still has a negative interest rate. They haven't done anything as far as raising the rates so far. Yen, on the other hand, increased in volume, had a nice move lately to the upside. We'll be talking about in a moment. So let's see, maybe this time, you see, they don't even have any predictions, no consensus as far as what to expect. So let's see what happens. That's on Wednesday. We have CPI numbers from UK, also very important. The inflation there is high. Retail sales from US on the same day on Wednesday. We have employment data on Thursday from Australia, interest rate decision from China, and retail sales from Canada. So China has two releases here, very, very important. So these are the things. Again, I just took the high impact announcements. You can filter them. You can choose what part of the world and so on as far as the economic calendar. Okay, let's move on to the MT4 platform, and we actually start with China. Take a look. Since removing all the lockdowns and so on, and making things easier, that was affected by a lot of protests of Chinese people. I think that was the main reason why they lifted all the limitations. So the index had a tremendous move to the upside. Take a look. 2 straight weeks to the upside on the daily chart, looks very nicely. If you remember, we spoke about if we established support about the 13,500, we would move higher, and we did. And we moved higher than the previous strong resistance that followed with a sell-off. So we are on the way up with China. The same thing with Hong Kong index as well. So with China, as you know, I bring up a few instruments, copper and oil. So copper has a very nice move to the upside. If you remember, we said if we break this resistance here around 393, 394, we'll move higher. And that's exactly what happened. We are in the vertical, going to retest further highs. Let's see what happens if this Chinese move sustains, which if you zoom out to the monthly chart, it could move higher. It could move maybe to 14,000, 14,500 possible. And that would actually continue the move of the copper possibly. And crude oil, if you remember, we spoke about the crude oil, and we said it didn't react when we spoke last week. It didn't react to move of the China, and then finally the last 3 days of the week it had a nice move. We came to $80 from the low of the week, around $73, $74. It was a nice move. Let's see if we are continuing to the upside. We'll talk about commodities in the moment, but I just wanted to connect those. Again, for the new people, China has a big, or Chinese economy has a big impact on the commodities like copper and oil. I just wanted to illustrate that. So back to indices. U.S. indices, S&P had a nice move to the upside. It was very choppy though. If you see those tails, it was not an easy ride there. So we are on the way higher. Let's see what this week brings us. Again, Monday the market is closed. Let's see what Tuesday brings after a strong week that we just had. Nasdaq also had a nice move to the upside. We are above the 50 and 100 moving average. We're on the way higher. If we continue this way, we might come to retest the 200 moving average. There's a possibility there as well. And that's as far as the US indices. European indices are on fire. I can call them on steroids. DAX, super move, it just continues higher. It didn't react to initial sell-off of the US markets with the release of the CPI when it happened. DAX, it just continued going higher. And if you zoom out, we are pretty much on the way to retest certain resistance that could be anywhere. We might come to this initial move where we start getting choppy, and this level here was 15,521.5. So that's roughly another 300 points to the upside until some resistance will be obvious around this level. It could be the case. Again, let's see what Monday brings. The US market will be closed, so DAX could manage that move by itself. FTSE, UK FTSE, it's really strong. And it's kind of funny because they're really having issues there, political issues, economic issues. A lot of work is on strikes. That includes healthcare and other areas, and the market just running. I don't know what really makes it run, but nevertheless, we are. If you take a monthly chart, we're about to hit all-time highs, and that level was in 2018 in May. So the high here was 7,884.5. And we were at 78.52. It's about 30-something points to the all-time highs. It's very interesting. But let's see what happens. Definitely, this level from which we sold, it could play a role as a strong resistance. We're getting really close to that level. So that's as far as the FTSE, the UK index. Two indices didn't really move higher. That's Nifty. I think got exhausted. Take a look on the markets going higher. US, European, Asian. Indian market is not really moving. I think it really had a nice move when things were falling for everybody else, and now it's really waiting. So let's see if it's going to catch up, if market continues, or when the markets turn around to the sell, it might actually sell off as the weakest one pretty much. Another weak one is the Nikkei, the Japanese index. and it's been struggling because of the strong yen. We'll talk about the yen in a moment. If you remember, I mentioned to you this trend line that went below, and I said we might have a hard time going above the trend line again, and that's actually proven to be true. So let's see what happens. First, if yen continues to be getting stronger, and maybe interest rate decision will come in favor of yen, we might see continuation to the downside. And if global markets begin to sell off, that might intensify this process. So we might see Nikkei selling off. So that's as far as indices. And next thing, we'll move to commodities. Actually, no, before commodities, let's take a look at stocks really quick. And we'll start with our friend Tesla here. And Tesla did the same thing on what it did on the previous announcement. Let's see if I can bring a different chart here. If you remember, on the announcement of right here, they announced that they're lowering the price in China. The market was going higher, but Tesla kept down. We went as low as 101.66, and we ended up that day at almost 113. And then we went higher. It looks like buyers came in, if you remember. Now, the same thing happened on Friday. They announced they're lowering the price in Europe, and stock reacting the same way. It opened with a gap because it traded low at pre-market. It opened with the gap down, and it covered the gap and closed on the highs. So the high is 122.45, and the close is 122.22. It's only gave away 20 cents from the highs. So what does it say? There's a buying interest in the stock. Even on the bad news, kind of bad news, that they lowered the price for selling their cars, right? So the moment the gap down happens, the buyers coming in and buying it. And then the same thing happened here. So logically speaking, it looks like the stock is ready to run. And if you remember, we spoke about it, we said fundamentally it's a solid company. And it looks like the buyers are coming in and looking for values and getting into Tesla stock again. So that's something to pay attention to. Now, what did I want to bring? Netflix. Netflix is actually reporting earnings, and we started the earnings. We started with the banks. We'll talk about it in a moment. The earnings on the 19th after the market, and if you take a look, the stock has been very strong. It's been moving higher, and we might see continuation. If you remember, we did close the gap right here. Then we pulled in again, and then we came back. It was a very nice, strong recovery. We came back. So we're having kind of a double top here and closing the gap. So here, the support meets the resistance. Let's see who wins. And the earnings could probably be that decision maker, and see which way we're going to go. As you could see, we had support here, then we just gapped down, and then we came to retest. That was back in exactly a month ago, mid-December. We had a choppy, not the choppy, was a sell-off, and we steadily came back to that level. Let's see what happens. So again, it is reporting earnings on the 19th after the market. Now, banks, if you remember last week, we spoke about the banks starting really the earnings season, and banks had very nice earnings. The stocks moved up. We'll take a look at the moment. Citibank had a nice move to the upside. We had JP Morgan reporting nicely to the upside. Bank of America as well. And this week, Goldman is reporting. He already made a move in sympathy with other banking stocks. And Goldman is reporting before the market on the 17th. So let's see if, logically, that would make sense. The earnings would be better than expected following all those earnings from the other banks. So is this move already priced in that? We don't really know. But simply speaking, we might come and retest these levels maybe before the earnings or into the earnings. That's around $378. So that's as far as the earning reports. Now, Amazon, since they announced that laying off 18,000 workers, the stock has been going higher. Of course, the market's been going higher as well. So that's another one on the way. Since we hit, just to remind you, we hit the pandemic or COVID low, and we found a strong support there from which we really moved to the upside. So that's as far as Amazon. The key focus here is, will this move be continuing? And if it will, we might see continuation to this previous level of resistance around $103.60, $104. Disney also had a nice recovery since the recent sell-off. We came back to retest 100, and let's see what happens here. Will we reject this level and continue lower? Will we break up and start establishing support above 100 and moving higher? Let's see what happens this week. Now, Facebook also, it's been showing some strength, and we are at the series levels here of resistance. Take a look. High here was 137.67. High here was 138.20, and we're hitting that resistance again. And the past 2 days, we were not able to break through it. So we might actually pull back in if we couldn't break this level here. Of course, it will depend a lot on what the market is doing. Boeing, really continuing flying. Thursday, we made the new recent high. Friday, we couldn't break it. We had a spike higher, but closed below. So far, this is our resistance here. And it looks like we are hitting strong resistance from which was sold out. And that was back in February 13th, 11 months ago. So let's see if that level holds, or if we do break above it, we might continue higher on Boeing. Teva, if you remember, we spoke about Teva. Teva just came back to that highs that we spoke about a while ago. That was back in August. We hit this level, and we came back to retest it again. Now, it's not a big deal. Yeah, you could say it could break out of here, could pull back in, and it's still percentage-wise, it's a very nice range from $11 to $7. But look at this. This chart looks really, really promising here. Again, we're not promising here, and there's no guarantee, and definitely not an advice to buy or sell. But if you look at the monthly chart, it looks like we're trying to break out of this accumulation or channel, whatever you want to call it. We've been here for a while. Let's just look at it. It's very interesting. February 2020, we made an attempt to break out of here, and then we made another one 2 years ago, January 2021. Then we really were sliding lower. We're trying to retest the lows around $7. Right? What was the low here? 7.25. Then we broke below it in July of last year. 676 was the low, and then we were just sitting there. This is the monthly chart, just to remind you. And then we finally broke through it through this 1, 2, 3, 4 months. It was a strong move, and let's see if we actually managed to break out of here. I don't know if fundamentals are. Pharmaceuticals are a very tricky one. But if we do break through this resistance that we're facing now, we might actually have a nice move to the upside, and potential could be indefinite. So let's see what happens here. Definitely have it on the radar. Nike. If you remember Nike, we spoke about if we break that initial gap up level around 118, we will continue. And we are actually continuing. This is the weekly chart. On the daily chart, you see the strength of it. Take a look. Initially, that was initial gap, just to remind you that we spoke about on the good earnings. And then we had an attempt to break through it, and then we did, and we continued higher. So let's see what's next for Nike. We are facing the area of a lot of actions, so we could face resistance somewhere here. If not, we might continue higher to around these levels, around 137, 138 on Nike. Now, the stock we didn't talk about for a while, that's Uber. And slowly and quietly, Uber just made its way higher from the 24 to all the way to 29, and it looks like we are coming to this resistance here that we face around 29 and a half, $30, and we might have a hard time breaking through it. Just to remind you here, we had double top here from the second attempt. We really sold, and then we came back to it. There were no pullback since the new year. All the greens with the gaps and so on. So let's see. We'll be watching Uber on possible either breakout about 29 and a half or pull back again and trying to find support. So that's it pretty much with the stocks. Let's move to commodities really quick. And we spoke about copper. I'm not going to repeat again. Copper and oil are moving higher on China. And oil is trading at 80, which is psychological round number. And we might see the continuation to the upside. And we just need to face the previous resistance. Here, that was $81. And one here was 81 and a half. And if we do break that, so 82 and a half could be a next level of resistance. We could also be stopped by the 100 moving average, which is currently around 81.81. Let's see what happens there. Natural gas, very tricky one. Actually, we might see some effects from the weather on natural gas in upcoming week. We had confirmation that this previous low of 343 was holding, even though we broke through it this last week. We went as slow as 338, but closed at 347, above this low of the what was it? On the 11th, that was on Wednesday. On Wednesday we had the low, and then Friday we closed higher. So it's a very important what's going to happen next. So far, the resistance, the closest resistance is at 394, and as you could see, we're making lower highs and lower lows. This is 4-hour chart, but we are confirming. So we have a double bottom here on natural gas, and let's see what happens in the upcoming week. If we're holding this level here, again, the low was 342, and the low on Friday was 338. Let's see if we come to retest it, or we're going to go straight up when the market opens again, or we're going to gap down. It could be anything, but it looks like this level is presenting a strong support, and it could be due to this right here. Take a look. This was resistance, 339. That was back in October 2020. Then we had a support here from which the whole move to the upside started, and that was December 19, 2021, and we came with a very strong sell-off, 1, 2, 3, 4, 5 straight weeks to the downside, and we are hitting this around 340 area of support. So natural gas, very serious situation here. It's either we continue lower, or we're going to have a strong bounce, which could be due. There's winter, there's war going on, unfortunately, geopolitics and so on. The weather effect could be another one on the side of natural gas. So again, not to say a lot, we'll be watching natural gas in the upcoming week. Gold had a nice move to the upside, and if you remember, we spoke about this level. If we break 1877, we'll continue. And on the daily chart, we tried to break it on a few attempts, and then the last 2 days were the very strong move, straight move to the upside, and Friday we closed on the highs. So the high was 1921.84, and we closed about $2 lower, almost on the highs of the day. Excuse me. Silver as well, and silver has a very interesting point here. We might continue to the upside, and if we do, around here we might see the resistance around 25.80. We are above all three moving averages. We tried with the spikes. It's not an easy trading. Silver is never an easy one. It did close on the high of the day. So that's as far as metals. And let's take a look at softies, the soft commodities. Let me bring them up. Corn and soybeans had a nice move to the upside. You see in the daily chart after this plateau, quite a strong 2 days, especially Thursday was a strong day to the upside, Friday as well. And we are looking to continue possibly to the next level of resistance. Soybeans, the same thing after confirming this support around this 1472. We had to move up, and we are about to touch 200 moving average here. Now, wheat, it's really lagging. We did have a triple bottom. We spoke about it here as well. And then it moved high. Then we came back to retest again. We held that support around 724, 725, and then we moved up again. But we didn't really move strongly as we are on corn and soybeans. So if those keep on going, the soybeans and corn, wheat can finally shoot up and catch up with it. So the 50 moving average could be the first checkpoint. That's about 773, 774, and so on. So again, in soft commodities, if corn and soybeans remain strong, wheat can start catching up with it and move to the upside. That's it with commodities. Let's move to Forex really quickly, and we start with dollar index. Now, dollar index, I don't remember if I mentioned that, but this was something that analysts are paying attention to, something called dead cross, when the 50 moving average breaks below the 200. And take a look right after the selling intensified. So dollar index also very strong level here around 101, 102. And let's see if we get to there, and let's see how the price action will be working around that level. Now, 10-year yields finally broke below the 350. That's what actually triggered the sell-off of the dollar and the move of the gold to the upside. So let's see what happens around these levels: 101.39, 109.40. Sorry, 101.40. When we get there, see if we hold those levels. And with that, of course, the major currencies moved higher. We just run through them really quickly. Euro broke out of this resistance here. Pound didn't actually. It's still below this resistance, so we might go and retest it there. New Zealand dollar, the same thing, didn't really move much to the upside. So euro really strong against the dollar. And another one that's strong against the dollar is the yen. Yen had a nice move. Again, like I said, this week we have interest rate decision from Japan. Maybe there's some surprises there and we'll continue. So if not, in any event, we want to see how we're acting around this level here. The low from which we started this series move to the upside, 126.85. We about 100 pips away from there. And if you remember a few weeks ago, I said that one of the officials in Japan said that he sees the level around 120, and we spoke about it when I think we were somewhere around here, 135. So it looked really not so realistic, but take a look, we were at 127, 128. So it becomes kind of more realistic now. Anyway, we might come to retest this level. If we hold it, we might bounce. If we break through it, that's pretty much a free zone here that we can just fly downside to 100 moving average, which is currently 121, 122. So that could be the case as well. USD Swiss. It's really holding this level, so it didn't sell off against this currency. So if the dollar index starts bouncing to the upside, this could be showing the strength in this pair, and we might see the bounce to the upside, as we couldn't break this level for a very long time. This is the weekly chart. Initially, we came here the week of December 11th, and since then we couldn't really break. We had the one tail below, but it didn't really hold. So dollar Swiss, nice candidate for a reversal. Another one, dollar Singaporean dollar. It's if you remember, I don't know if we spoke about last week. Maybe I spoke about my other reviews. We did break through this level of support easily, but now we're getting close to a strong level of support that we'll retest a few times, and that would be around here. We did break through it, but we didn't break this level here. The low here was 131.87, and the low on let's see the daily chart. The low here was 131.80, and the close was 87. So we did close exactly on this low here that was back in end of May 2021. So again, it could be wishful thinking. It could be attractive. We could easily break below that. But take a look. We did play around this level, and then we had the nice bounce. So if we do continue to hold this level, we might see actually a nice reversal. And that's, of course, if the US dollar gaining some strength. So this is the USD against the Singaporean dollar. We'll be watching that. That's it pretty much as far as Forex. And very interestingly enough, Bitcoin finally made the move. And if you remember, we spoke about it, Bitcoin is very connected to the equity markets. And when the equity markets are running, there's a chance the Bitcoin will follow. And we finally broke through this dead zone. There's nothing was happening. We just kept them moving. And take a look, we pretty much erased the whole sell-off that started with FTX, with that crash of the exchange and mysterious disappearance of billions of dollars. And we just came back pretty much rapidly to that level. Now, will this move be sustainable? Will we move out of here? We're not going to guess. We're just going to set up the line, and the high here was 21,500, almost 21,447 to be precise, and that was the end of October. And we were shy of it so far by about $140. So let's see if we do break above it and we start building support, we might actually see continuation. Or maybe the whole move was just the fake manipulation and we come right back. We don't really know until we see what happens. So that's pretty much it. We'll be watching, of course, what's next in Bitcoin, as that's a very attractive speculating instrument. And that's it pretty much. Just to put it all together in one sentence or two sentences, market is closed on Monday. We have some data coming from China and other places. We have dollar index retesting strong levels of support. We have European indices of running very strongly. We have especially FTSE about to make a new high. And we'll see what happens. Monday, again, is going to be a little bit interesting without the US markets. And then Tuesday is going to be full-scale trading day. I want to wish everyone a great weekend or whatever's left of it, and get some rest, get some energy, and of course have a very successful week. And all the best. We'll be back next week. Take care.